Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Thursday, May 14, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. Today on the markets, though, we actually have the American markets that are standing out compared to their peers, to their Canadian peers. If we take a look at the situation here on the NASDAQ, we're going up, testing the resistance on the Dow Jones as well. Same thing too on the SPY, where we're actually testing the resistance. However, even if on this rally at opening, even if markets are testing the resistance, we cannot confirm yet a credible and clear bullish cycle. So which means that those of you who have opened some bearish ETF on the SPY around this area or that area, we have done so on marketgurus.tv. As long as we do not have a clear break of that resistance on the SPY, there is no need to close those bearish ETF. And this is why on marketgurus.tv that you can have access for free for 10 days. We're continuing to hold on to SPXU, which we recommended, I think around here, if I remember right. So there's no need to close that position. It has not broke down its support. And we're continuing to hold on to HXD as well, which is having just a slight correction and continues to maintain its upward trend. And on the TSX though, the increase is actually less compared to the American indices, but the TSX so far is able to slightly resist and starting to confirm, I would say, maybe the beginning of a sideways formation on the TSX. So which sectors are explaining the rally in the US? It's the technology and the industrial sector. We talked about those sectors on marketgurus.tv. In the technology sector, let's take a look at this. There are some stocks, there are not a lot of breakouts in the technology sector. There are a few breakouts. For instance, here we have Lexmark International, which is a breakout. However, Lexmark, look, all this congestions here with all this resistance at 45.24. So we do not have markets that are starting a bullish cycle. That stock is breaking out. Can we believe in today's breakout on Lexmark? I think it's not the best breakout ever because there's a risk that the stock might pause or not pursue its rally. Paychecks could be next on the line to start a breakout higher than $50. Apple higher than 130. We know that Apple is in talks with Alibaba in China to bring their Apple Pay in China. Cadence Design System higher than 19 at 33, and IBM higher than 175 will be a go. So technology stocks so far, Yes, I've explained the rally. However, there are not a lot of breakouts on them. It's mostly stocks that are testing their resistance and that could break out. So it's important to not rush your move on those stocks here that are actually testing their resistance. Now, we also have the industrial sector that stays strong in the US. And the industrial sector, first of all, we do have a lot of railway companies that seem to confirm a bottom or a pause, I would say. For instance, you have here Norfolk Southern. Look at this. The stock is testing the low of its downward corridor. And every time we have tested this, usually we actually had a rebound. So that might be a point that might lead to a rebound on Norfolk Southern. The thing is, right now we see that we are oversold with the stochastics, but the wave of buyers is not consistent enough. We need it to be around 30% to confirm a clear entry point on a stock like that at the bottom. And you put your exit point below 96.04. Canadian National Railway as well on the New York Stock Exchange. It seems to confirm a bottom, but I think it's kind of premature to say to buy that stock right now, especially when markets cannot confirm a clear bullish cycle. So if it does stabilize or pursue its rally for the next few days, the stochastic is around 30%, 40%. Exit point is at 61.30. CP as well, it's in the same situation. 175 is actually the point where you should put your exit point on CP. I think I would not get in today. I'd like to see the stock confirming a clearer stochastics around the 30-40% range to confirm an entry point on CP. And we'll also have Union Pacific. There's also a lot of defense companies such as Lockheed Martin, which is today breaking out. Boeing, I mostly consider it as a rebound target, 155. So if you're buying Boeing, your exit point now becomes slightly below that support at 145. Your target is 155 until that resistance. And Raytheon, well, it's not a breakout yet. It will break out higher than 108, target 110. So it's really limited in terms of long potential on a stock like Raytheon in the industrial sector. On the Canadian side, we also have this situation too with our railway companies. But on most railway companies, still, I think the situation is not appropriate yet to buy them. But they're definitely in a situation where at this price, there could be really a bargain if the rally continues. So, railway stocks, interesting situation to be watched in the next few days if the rally can continue. Now, which sector also stood out today on the TSX? It's the gold sector at opening. But it lost all its upward momentum. If you take a look at the situation here, what happened on the gold sector is that there's a Greek finance minister that came out today saying that the debt level of Greece is unsustainable and the payments that is due to the ECB have to be delayed. There continues to be the fight. Will they be able to actually come up with an agreement? A lot of investors think it's really likely because there's so much to lose that at a certain point, some of the parties going to have to give some ground for a compromise, right? Now, we do have the gold sector, though, that is slightly pursuing its upward momentum. Now, if yesterday I said it was a go on the gold sector, we also recommended on MarketGurus.tv a bullish exposure on the sector. The stock was PAA, Pan American Silver, that we recommended as an analyst choice on MarketGurus.tv. Today, the stock is pursuing its rally. So it's a hold. If you bought some positions yesterday in the gold sector, you hold on to them. Now, if you want to buy today, I think, first of all, you're betting that the situation is going to worsen in Greece. So it's a bet that you're making if you're buying them today. I think it was really yesterday that the timing was appropriate. Right now, on Dator Gold, we actually have a slight pursuit of the bullish cycle, but really slightly. I think those of you who opened some positions yesterday on Dator Gold should continue to hold on to it. But whenever you make a 5% on that stock, be quick to take some profit. You know, the trend is still your friend on that stock. However, you have to take some profit while the stock rallies and maintains its upward trend. Same thing too for Oceana Gold. Today, there are no new breakouts in the gold sector, but some stocks have to be watched. For instance, New Gold higher than 426, Rubicon Minerals higher than 140. And on the energy sector today, folks, look at oil. Oil has been unable to go higher than that former bullish corridor. So since we have broken that very bullish corridor down, we have broken it down here, oil has been unable to do so. So right now we're actually getting lower than this other bullish corridor on oil, and now the next target could become around 2025. So it's actually something that will bring again a lot of energy companies further down, because right now we have a bearish momentum that is being confirmed more and more on the energy sector. On marketgurus.tv, we already have a bearish exposure on the energy sector. We recommended that bearish ETF HED around this area. We have been able to take some profit already on HED, but yesterday we also said on marketgurus.tv that it was a go for those of you who didn't acquire HED when we recommended it on the first time around May 6th. So the energy sector bearish momentum actually continues. Now, where could be the target? Where could be the pause? Well, we could easily see that the sector could pause around 215. So there's about 6 points to be lost. But most of all, most stocks such as Shawcor, Pembina Pipeline, Baytex Energy are all pursuing their decline. Actually, Baytex, where the bottom could be, so far it's hard to tell though. Are we going to have a bottom at 1943? It could be possible or even lower, but right now we're so oversold on Baytex Energy, but the buyers are just not coming in. And really the bullish momentum that we had in the last few days on the resources sector has been fragile and continues to be fragile because the fundamentals of the economies have not changed. Most of the economies are growing, but still below expectation. Even yesterday, we had the GDP reading in the Eurozone. Great numbers because they were all positive, but still below estimates. In the US, well, the last GDP reading was slightly in line or slightly below estimates. So really the economy is growing, but not at a pace that's enough to actually sustain a rally among energy stocks. Now, it was a question from yesterday. What do you think of HZU? Well, HZU, it's a great ETF to trade the silver. We also have AGQ because it has more volume. But really, what do I think of HZU? You asked that question yesterday, Jules. If you bought HZU, as I said, it was a strategy to trade the bullish momentum on the gold or the silver. Either you trend trade the stocks or you buy some bullish ETF, which is the safest alternative. And HZU was a great trade yesterday. If you have it, you hold on to it. But whenever you make a 5%, take some profit.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back. So we had one question yesterday from Ms. Lingbing. Do you think KLH is a buy for a short-term trade? Thanks. Well, yesterday the stock was surging by almost 10% yesterday. Now, those are the red flags that you should have. First of all, a short-term trade, technically speaking, yes, we had the reversal of this important downward trend there on KLH. A good thing. Now, the first red flag is the stock was surging by more than 5% on that breakout. So that has to be a red flag, right? When the stock has kept a downward trend for so long and now surging by more than 5% on a one trade, that's a red flag. Second red flag is try to take a look to see where are the next moving average. So you see the stock surge, right? And actually went higher than the 50-day moving average. The 10-day didn't even cross the 30-day moving average. And the 100-day moving average was really close there at 113. So let's say you bought KLH here, you know that at 110, 113, that was the maximum where the stock could actually head. And we see we tested the 100-day moving average, and now we're going down. So I think that if you didn't get in yesterday on KLH, it's a good thing. Right now, what you should see is to see, can the stock stabilize between the 50-day and 100-day moving average? So if we could stabilize between 113 and 103 for 2-3 days and then confirm another breakout, that might be more interesting and higher than 113. Now your next target becomes the other moving average at 200 days, which is around 123 on KLH. So I think it was good that you didn't get in the first breakout. Let's say the stock stabilized there, breaks 113 and goes towards 123. What could allow it to go even higher than 123 is that if we have the 10-day that's crossing the 30-day moving average on the upside. That will confirm that the bullish momentum is really positive and KLH could actually continue. So yesterday, I think with the fact that it surged by more than 5% on that reversal of that downward trend, by the fact that we had the 50 and the 100-day moving average that were so close together and didn't give us enough percentage if you bought here yesterday on KLH, I think those were all the red flags why you should not rush when you see a stock surging by 10% or more than 6% to actually trade it. But you also have to take a look at the forest, and looking at the moving average, I think can actually give you some perspective into that misleading. Now, Z is asking me a question, do you teach this technique in a course? Z is referring to the day trading techniques. Yes, we do. Actually, I want to show you here on the French website, we actually have our courses that are going on right now for $295, right? You have a course, and the good thing is that you have for 1 month for free, you have Market Vision Plus, you have Market Gurus.tv, and Trader Plus for free. $0 for 1 month. You have it. Usually it's for 10 days. I would give it for free for the free trial. But if you take the course, you actually will be able to follow the course anytime you want, because it's a video. You can access it anytime you want, replay it, rewind it, watch whatever you want to do. And you have all the softwares in Market Gurus.tv for free for 1 month. So what you have to do, either you can order here or you can call us, and it will actually give you all the promotion that you deserve. And this will be actually a great technique to give you the basics to learn how to day trade. And actually Michelle does a course there. I think you also will be able to have access to other courses if you buy one course there from Michelle. So this is actually some worth to give it a try. If you really want to learn about day trading, it's definitely the basics that you have. And by having our software as well, you'll be complete in terms of the tools necessary to be a great trader. Now, Eve, you bought CP and CNR in April 29, in April 2009, not 29, 2009. Is it still a hold? So you bought in 2009. Man, Eve, of course it's a hold. Why should you reduce them? Why? Look, as long as those stocks, I'm talking CP, as long as it doesn't go below $200, there's no need to close that positions. It seems to confirm a bottom. It's not clear yet if it's going to confirm a bottom. Now, if you bought at 2009, you're more than happy. So the thing is, if ever, let's say the stock could right now start to confirm a pause and start to rally a little bit with the stochastics that's toward the 30-40% range, that would be interesting to potentially maybe increase your exposure a little bit on CP. But if it goes below $200, you close it. CNR, well, great job if you bought it in 2009. Now for CNR, look, the stock is testing an upward trend. There's still that support that's there. As long as it doesn't go below $71, I think there's no need to close that position. It also seems to confirm a bottom, but it's not clear yet with the stochastics. That also might be a position that you might feel comfortable to increase it if we do have a confirmation of a buyer's momentum that can actually allow the stock to go higher. But $71 on CNR, I think you might reduce your exposure. $200 and below on CP, you might reduce your exposure. But I don't think that they're going to do it just by looking at the technical indicators. I mostly think that they're going to have a bottom first before breaking this important support. So it's a hold on both positions, and definitely a great move by you, Eve. Congratulations on that. Now, as for the best day trade of the day, it's HNR on New York, a stock that has remained active for the last few days, really. And you had one entry point here, another one there, another one there. Those of you who got in here or there, well, here it was kind of difficult to take some profit quickly, right? Here, well, you had to take some profit here because, look, if you respected your trend around 180 maximum, if you got in here, you should have closed that positions on HNR. Now, the stock has a big wave of sellers that's coming in. As long as the stock stays below 170, there's no need to buy that position. But if it goes above 170, that will be the new buying signal on HNR for day trading. But I doubt it could do so because it has surged by more than 100% in the last few days, and it has already reached its 200-day moving average. So I think at this point, investors are kind of reluctant to buy the stock. But it has been explosive, and it has been our best pick of the day for day trading. So far, folks, we have the industrial, the technology sector on the US, as well as the Canadian side that are slightly standing out, but there are not a lot of breakouts, mostly stocks that are testing their resistance. Markets as well are not starting a clear bullish cycle. So this is why we continue to advocate to continue to hold on to your bearish ETF as long as you do not have a confirmation of a clear bullish cycle. As for the gold sector, a slight pursuit of the rally. If you're buying gold stocks today, I think it's kind of too late. If you're buying stocks today in the gold sector or the silver sector, you're betting that the situation in Greece is going to worsen. This is a catalyst that could allow the sector to go up in the next few days. If you bought yesterday, there's no need to close those positions, hold on to them. We did it on PAA on the TSX that we have in our analyst shorts portfolio on marketgurus.tv, and we feel comfortable to continue to hold on to it. But whenever we make a 5% on that stock, that's going to trigger a profit-taking opportunity on it. So I wish you all a good trading and see you tomorrow on the Swing Trading Show on decisionplus.com.